Hello, everybody. Thank you so much for joining us. We have David Warshaw on of WealthPlan, and we have our brilliant portfolio manager, Bill Cannon. This is going to be fantastic. First of all, let me just say hello, David. Thank you so much for joining us today.
Thank you so much for having me. It's a true honor and pleasure.
Thank you. And Bill, how are you doing?
Good. How are you? Great to see you.
Good, good. Thanks again. So just going to start everybody off as they continue to filter in for an agenda. I'm here. My name is Leah Wald. I'm the CEO of Valkyrie, very proud CEO of a brilliant team and that gets to host these webinar series. So I'm going to start off by asking David a couple questions. He has a very interesting background. And then David is going to ask Bill some tough questions about portfolio management and assets and digital assets and everything that's going on, and maybe some right hooks, and we'll see what goes on. And then I'll come back in to close this all out. So just as a high level overview, for those of you that are new to Valkyrie, Valkyrie is a digital asset management firm. We have a series of cryptocurrency trusts and SMAs, ETFs, and a DeFi hedge fund. But I will save all of that for another day. Right now, I have too many questions for David. So David, jumping right in. First, please, can you tell us about yourself and also your route to crypto? You've been in for a while.
I have. I've been in since late 2013. I heard about Bitcoin on a libertarian podcast, and that podcast changed my life because it was very fruitful financially for me. So listen to podcasts.
That's definitely true. So tell us a little bit more about 2013. So crypto assets and also your work with WealthPlan LLC. Tell us about your route, as a financial advisor.
Yes, I started as an advisor with Ameriprise. It was then American Express Financial in 2004. It was really tough trying to get people, 2 times your age to give you their life savings. So struggled. Many nights go home crying, blood, sweat, and tears. And then I went independent in 2011, joined a startup RIA in 2016. That didn't really work out, and then went back to my brand and launched my own RIA in 2020. Now servicing about 115 households, a little around $65 million in assets under management. So the future is bright. The future is very bright.
That's fantastic. And just, as a top, high level, how are you currently assessing and investing in digital assets on behalf of your clients?
Yeah, so, because I've been investing in this space for a while, I was very frustrated with hey, I have 35% of my portfolio currently in crypto. Most advisors would have a heart attack hearing that figure. Sometimes I do as well. And there was just no products. There was no Valkyrie, years ago. So it's become so much easier. So now I'm trying to allocate a 1 to 5% allocation to crypto for clients using an SMA custodied at Gemini. So that's my goal, get more people into the ecosystem, because I truly believe this will be one of the best performing asset classes over the next decade.
That's fantastic. All right. And before I toss it to you to talk to Bill, just to make a little levity on a Tuesday morning, any horror stories of investing in Bitcoin so early that you can share?
Yeah, that's all I have is horror stories. Look, it was a long road. One jumps out at me. I was on 5 exchanges at one point trading. And I was on a trip in Africa when I got an email from one of the exchanges, Bittrex, saying, "Hey, get your money off, or we're going to just basically take everything." So that was stressful. I've lost, over $1,000 trading on these exchanges that you just didn't know what to do. When I first went in 2014, the market lost 80%, but I felt hypocritical as an advisor selling. I was like, well, I always tell clients, to buy and hold and dollar cost average in. So then I bought more during that crash. So, it just makes the stock market look like your bank account.
No, it's definitely true. I mean, it's a testimony to how much the industry has matured now on what you had to do in order to even secure and find good price discovery to the type of financial products that we have today. I think it's incredible. And you've been there through the whole thing. So, so thank you, David, for joining us today. And you definitely come from the perspective of asking good questions better than I can to Bill. So I'll toss it to you just for everybody in the audience. I am looking for questions, and I do have questions that you guys submitted prior to this webinar. So if there's time at the end, I'm definitely going to try to ask it to the gentleman, but I'll toss it to you now, David. Thank you so much for joining us again.
No problem. Okay, Bill, you're in the hot seat, my friend.
Yes.
So I have so many questions for you. We're in such a crazy time, in America today. So let me just fire my first question. So with the Fed tightening, planning to raise interest rates by the end of March, how do you think Bitcoin and other digital assets, cryptocurrencies are going to perform, in these market conditions?
Yeah, no, great. At least I consider crypto and especially Bitcoin more of a risk asset. So I think we're seeing right now a little more risk off period. I'm hoping that this period does. I feel that the Fed is trying to do as good of a job. I think today's hearings as well with the chair, I think that's going to provide a little more transparency for the strategic plan ahead. I think that this first quarter is very important. I think tomorrow, the economic indicator for inflation, CPI is being released tomorrow. I think that that's going to say a lot and try to get meaning the country's financial situation a little more stable. That said, I think that Bitcoin could see a little more stability, it's maturing definitely. I think that crypto is definitely in a period of growth, but this year, but we'll also see it a little more acceptance. But I do see a little more volatility, and in terms of this tightening period, Leah did a great interview probably half an hour ago that I certainly got some tidbits on, and I certainly agree with. We're trying. If you remember in December, their press release after the 2-day meeting was that they were going to have three interest rate hikes next year, and as well as they were going to taper down the asset buying program, right? As in terms of they're going to end it as of March and then start the interest rate hikes as starting in March at that meeting as well. Goldman came out yesterday and said that they're now anticipating 4. They even I have to investigate a little bit, but they even said there might be a possibility of 5. On the other hand, they say that probably the picture is not going to be. You have other guys on our team that a little more skeptic and say that there might not be that many interest rate hikes in terms of as a reward, not a reward, but in terms of just providing more ammo to continue this growth period that we're currently in, or probably in the middle of a rocky road in. But long story short, I think that Bitcoin in terms of it, we'll see a little bit of growth this year. We're just looking at technicalities. I think you have some other. We'll look into some more Bitcoin behavior questions later, but I don't know. I see that it's risk off. I think it's probably one of the first assets to kind of come off a traditional portfolio, or at least kind of wind down the allocation a little bit until there's a little more momentum in price. But I do see this coming year as a good year for crypto overall, and obviously that has many sectors to talk about.
Right. So on net, even with all the, interest rate hikes and the potential for them, you're still very bullish on Bitcoin and crypto as an asset class in 2022.
I'm not very bullish. I would say a patient bull. Right now, we're trying to see some support levels here. We're right now, right about, what are we at, like a 41 or something like that. And we see a little bit of support right here. Oh, 42, look, we're seeing a little pop right here for almost 43. We're seeing a little support. I think a little more sustained trading activity at this level. But I would say these low 40s and probably even to high 30s provide a little more support here. But we do probably have, our team does say that, levels, I don't know, I read something today that at 45.5, the former support level, is probably acting more of a resistance. So we're probably seeing 45.5 and 48. Again, little by little. Somebody asked me a month ago, what do you see Bitcoin at the end of the year? I'm like, I don't know. I just wanted to see above 50 for a while, trade there, get some support, and just move on little by little.
Got it. And, as a portfolio manager, do you do any like hedging strategies to try to mitigate the volatility that we see?
No, not as of this moment, no. No direct trading, no direct hedging. I would just say that we're just monitoring whenever we do want to put on some positions. We're not right now at a wait and see kind of to see if there's going to be a further drawback in prices. But I would say what we have, I mean, the more important thing is that the team decided that we should be buying the dip as, as it's kind of, as you say, dollar cost averaging. That's what I'm doing personally as well. Trying to enter the market at this opportune time where we might not see these prices again, for example, and we're trying to get in, just at this moment.
Got it. Okay. And, how do you see crypto digital assets contributing to GDP growth in the US?
Yeah, I think that's a good question. And I think that it's probably like kind of a chain reaction. I don't know if that's a pun or not, but I would say that, like with the current environment, we do see, like from your first question, we do see interest rates rising, right? So who is that going to benefit the most, or we expected it's going to be financial institutions with a little more investment opportunities, right? They're going to deploy that cash that they're going. I read something today that, not today, but I remembered an article about that I read mid-month last month, is that I think that it was like something, I think it was in the journal, like each 100 basis point hike is about $7 billion of revenue for these kind of larger banks, and they just have a lot of cash ready to deploy. So right there, in terms of that chain reaction, I think it starts there, right, where you have these financial institutions able to deploy cash, to invest that cash, and hopefully that cash will kind of flow through the economy, or at least I would expect it to, from a very high level to flow through, and hopefully help some of these companies maybe start up some more companies. And during this little period of time where our economy is trying to get back on its feet, or at least, through this time of uncertainty. I'm not trying to say that I'm a huge bull. I would say that I'm more of an optimist in the team. But I'd probably say I agree with the people out there that say there's probably going to be 5% growth. I like the word using a mild growth this year. But I do, with GDP, I expect it to either be stable or just a little more improvement. Again, I'm more of an optimist in this whole scenario.
Got it. Okay. Well, I'm a big fan of optimism. All right. Let's address the elephant in the room, inflation.
Yeah.
Is Bitcoin an inflation hedge?
Oof. As of this, look, obviously we're always going to talk about gold, right? That's always the the product that everyone thinks of. If you compare last year's performance, which I don't think it's fair, right? You Bitcoin versus gold, Bitcoin wins. I do believe in the principle of that certain theme where you have a finite amount of Bitcoin available, and that it certainly can be looked as an inflationary hedge just because it's finite. But right now, if we did see it as, just to be frank, if we did see it as an inflationary hedge, we would see it kind of we would see a more higher trajectory, or at least a higher trend, right? Going in this, instead of going down, it would probably be somewhat moving. So like the 10-year has been reacting to inflation very, very well over this period of time, right? And and for a while at the end of the year, I would say for the last part of the fourth quarter, Bitcoin and the 10-year were moving almost hand in hand. It was really nice, and I thought at that point that I had a good discussion point for Bitcoin being the inflationary hedge, right? It was hand in hand, but it decoupled. That kind of performance decoupled over the last, I would say, 3 weeks. Obviously, we've seen the 10-year reach 1.8 right now, and meanwhile, Bitcoin trying to test some support levels. I do see probably and like I said before, this particular currency is this digital currency is maturing. I do see probably a little more, as more folks accept it, and I'm talking about folks not currently in crypto right now. I would say more financial banks accept it. We could see it as an inflationary hedge. At this moment in time, I would say that the skeptics are probably right. Well, how come it keeps on going down if we're talking about inflation and everything like that? I did see some one CNBC reporter early yesterday morning saying that if it could be an inflationary hedge if we think that this is going to be the bottom point of it, and that if we see a rise in Bitcoin, it's reacting to inflation depending on all the certain metrics. And I know that's a little bit confusing, but it was just in terms of if we find this point of time of Bitcoin as the very foundation or the very, not necessarily bottom, because we may see a little bit lower, but it could start and with more acceptance of financial institutions and investors, it could be the inflation hedge going forward. So again, everything is brand new. You know this. News changes every month. So I'm waiting to see on that.
Got it. And advisors love the word non-correlated. That's the reason we diversify. We want things that zig when others zag. Do you hold that Bitcoin is a true alternative, is an uncorrelated asset?
Uncorrelated, I would say from a high level, it is uncorrelated, right? Like I said before, I would say before 2018, 19, you could probably see it moving hand in hand with kind of like the NASDAQ, let's just say the NASDAQ index. After that, I see a more kind of correlation with the 10-year. It just happened to be that, right? But in terms of just my background, I'm a fixed income guy. I would label it as an alternative asset. And I think that it's appropriate. I would, in terms of, it just doesn't seem to me that it should be correlated. Sometimes I see it, always talked about with the correlated with equities. I don't see that kind of correlation at all, maybe, and that's just me talking. I did, like I said, I was trying to see more of a correlation with the 10-year. And of course it kind of decoupled. So I'm kind of searching right now what it exactly follows. I think that right now there's a huge technical analysis standpoint right now. It is following the metrics, the traditional metrics that we use for equities. I think that that's really important in terms of acceptance, in terms of trading. Obviously, all the folks trading crypto, both here, I would say in North America, are using this as technical analysis, and they're succeeding. And it's been the volatility. Obviously, that's the old motto: volatility equals opportunity. And so, for me, when I first entered the space. When not entered the space, but when I first after I graduated school, I went into derivatives market at the Mercantile Exchange. And I'm sure everyone, or at least most of us here, are familiar with the NASDAQ 100, how it went up and down for the whole internet boom. I see a lot of those similarities right now. And I would just say, just back then, it was just the volatility wasn't really well accepted. Like pets.com, for example, that was just one name that I always remember. From my personal trading account, I always traded Cisco. And it was fun to trade them, but it was just in terms of acceptance, I think that right now it probably has to be categorized as an alternative investment.
Got it. Well, listen, I did not know that there's a correlation between the 10-year Treasury and Bitcoin. That is very, very interesting, and I love that. Volatility is opportunity. I might use that.
Oh yeah, no, and you should take a look, and it has decoupled. Which, like over the last, I would say December, and probably probably starting at the end of November, it was moving hand in hand with the traditional markets, even the S&Ps, right? And when I say the 10-year, I'm talking about the yield, obviously, not the price. But it was just so the yield would come down, the equity markets would come down, and Bitcoin would come down, right? They were all reacting the same. I would say that that's kind of decoupled over the past couple of weeks. Wow.
Well, one thing I know for sure is, I got married this past June, and when I when I started dating, my now wife, Bitcoin was like around $9,000, and
There
now
you
we're at
go.
40. So that, to me, that's a great inflation hedge. A 4x return.
Yeah.
So okay. So advisors, like things simple. We love ETFs. We love fund structures. So you have thematic ETFs now, in this crypto blockchain space. You have these new Bitcoin futures ETFs. I believe Valkyrie launched the Bitcoin futures ETF. And then you have spot Bitcoin ETFs that have not been approved. So, how do these work? Which ones do you like? What are your thoughts on these different product types?
Yeah, that's a great question. Let's just start. I'll probably reverse start. So let's just start with spot Bitcoin. How can you trade spot Bitcoin? And Dave, I think you alluded to that at the beginning of the conversation, where you have, I think it's more of it's relatively difficult, right? It's not really something easy as some may think. And so that's what I always say in terms of the next step of that there is a futures-based ETF out there for Bitcoin. I would say from this, let's just go back to spot. I think there's many advantages of having personal wallets, right? But the problem, like I said, like before, it's a matter of security and safety. There is, obviously somebody can read the headlines, and there is, some cases of like folks breaking into accounts and wallets and everything like that. And that's just not for everyone, right? And that's okay. That's why I think the ETF, like you said, was created. Something that investors can just simply, call up their managers like yourselves and invest in products. Now we have a ticker. Here's the ticker. I want to use it. And then they probably have to investigate a little bit on the fees and some of the, pros and cons of owning an ETF or a futures-based ETF. But I think it creates a safer option, right? Somebody can go on, get what they want they don't have to pay 30,000, 40,000 right now for this, or even 68,000, per unit of Bitcoin. They could purchase and invest their own denomination. That's okay. In terms of the ETF itself, like I said, it just provides an easy option for someone to allocate into Bitcoin, for all the managers out there to use these instruments to their advantage and get that allocation in. In terms of these thematic ETFs, they're growing in number. I think that a lot of them are pretty, and I've looked at a lot of the kind of thematic, as you say, some of the allocations. Some are pretty broad. Some have like one, maybe 50 basis points, 100 basis point allocation per company. Those are kind of broad definition assets. Like if you want to say that, I don't know, any kind of financial institution that's kind of adopting, that you see in the headlines, that's adopting the blockchain or even cryptocurrency, accepting cryptocurrency as tender, you could include that into that basket. And I think that is kind of if the top correlation was 1, I would say that you're probably looking at maybe a 0.4 or 0.6 correlation to Bitcoin. Some people may be comfortable with that, right? There's other kind of stronger instruments or ETFs that are a little more correlated. And I think that you'll see those, and even individual stocks that have, for example, that hold a good amount of Bitcoin on their balance sheet. I think that those kind of companies move more hand in hand with the Bitcoin. And that's, again, it depends on how comfortable the persons are. More mining ETFs, right? Those are a little more, obviously, very well correlated to the price of Bitcoin, as those guys are literally mining Bitcoin, right? And perhaps holding it on their balance sheet or using it as capital for further investment. Again, there's a lot of different kinds of ETFs that, one investor can look at. And it's just a matter of, I think there's probably maybe about 15 right now. And they're pretty broad in nature. They have different themes. And some of those themes can be more environmental. There's themes of mining. There's themes of also broad diversification. And just depends on how comfortable each investor is.
Yeah, I mean, I think it's just fascinating how far the ETF industry has come out. First, for the advisors that were nervous to allocate to crypto, they just had BLOK and BLCN, right?
Yeah,
Your broad-based
right.
blockchain ETFs. And you guys come around, Valkyrie, and says, okay, we now have a managed futures. We have a futures-based ETF, which is amazing. So it's more. And now you have, I just saw Roundhill launched an ETF called Meta to take a play on metaverse. And
Yeah.
now there's an NFT ETF, right, from Defiance.
Right.
So it's
Defiance.
just amazing how this stuff is becoming mainstream right before our very, very eyes.
Yeah.
So-
And that theme is like, it's going to be interesting. For example, I'm looking kind of like at that Defiance, as you mentioned, and how NFTs, and obviously every day you hear about these stories that, certain creative companies, and whether it's entertainment, whether it's apparel, music, they're embracing this NFT technology. And so it's going to be, again, an overall growth period for those particular holdings.
Yeah, imagine the guy at a party that his friend was like, you should really buy a Bored Ape.
Yeah.
He really regrets that he didn't buy that now.
Right, but again, like that's it's funny you should say that, and I'm really excited about it. And as you can probably tell from the rock posters, I'm very, music is a big part of my life, and I'm excited about it. But again, like whenever I have that conversation, it's like, well, in order to gain access to the NFT, you have to do this whole process of signing up for accounts, and also be careful how you do it from a security standpoint. And I think that kind of adoption and kind of that comfortability will come in place as the market matures this year.
Right. Okay, so let's say I build a 70-30 stock bond portfolio for a client, and client's okay with me allocating, call it, 3% to, the futures ETF. Would you take that from the stock side or the bond side?
That's a great question. I would take it probably at this point. Again, I'm a little biased from the fixed income side, but I'd probably take it from the the equity side. So I'd probably make the allocation probably 65, 35, 65, 30, and 5 for the alternative, in this case, the Bitcoin. I would say that from a more aggressive standpoint, like the 70-30, I would also, again, take it away from the equities as well. I'm sorry, from the 60-40, I would probably, from the 60-40 standpoint, I'd probably take it from the fixed income. And the reason I like that fixed income there is that you could probably get that solid foundation for performance every year, or expected performance. And then that could obviously off base the equities. The reason I would take it off the equities is just because just expected performance on these cryptos, I try not to use the historical aspect, just because it's just seen an incredible amount of appreciation over the years. It's for the history books. But I would say that you're going to see from these cryptos and from Bitcoin in general, a steady growth over, again, maturity is the theme here for this year. And I think for the next, like just say short term, up to 5 years.
Got it. So it would come from the equities, to be clear. Yeah,
I would say it'd come from the equities. And it would probably, you could probably look at some of the expectations on what equities are performing. I mean, in comparison to crypto, but I'm pretty sure, crypto obviously has done very well and done much better than equities over the past 3 years. But again, let's just move that away and let's just look forward here. I see that probably a little more price appreciation, considering that Bitcoin does start the year at a lower price. So there's more room to start, and probably equities see a little more challenge getting to those price points or price expectations that they want, just because of the uncertainty of the economy right now.
Right. No, that makes sense. And then in your asset allocation rubric, do you look at Bitcoin as an alternative or just a regular growth asset, or both?
I just use it as an alternative because it's uncertain. I just don't know. I can't, with equities and with fixed income, I could do a little more historical or a little more relevant historical research. But again, I would just say as alternatives, it's volatile. It is, there is, like I said, it's just too I would say it's a good alternative to have because it just, you know, the appreciation, you don't want to miss out on the appreciation. And especially for such a small allocation of 5%, I mean, smaller, I should say, smaller allocation. When I first started at Valkyrie, I was thinking that allocation could probably be 10% for crypto, but I think probably 5% is a little more, is probably a good point to start for that first time investor.
Got it. Okay. So definitely an alternative that grows, that hopefully will grow at 5% target allocation. Okay.
Yeah.
And so last year, you know, we saw Mass Mutual buying, you know, $300 million, you know, in Bitcoin. Do you see, you know, more insurance companies, pensions, hedge funds allocating in 2022, but we're not there yet?
Right. I don't think we're there yet, but of what I see is, and I wanted to kind of look into it because we do have access. Fortunately for Bitcoin, since it's transparent and it's secure, we're able to see the holdings of these of Bitcoin, and I could only find that Mass Mutual only owned about 100 million. They did get it at a price of 20,000, and so obviously the 300 million valuation comes at a point, like, you know, at the high point of what we just experienced in November, around 60,000 for the price of Bitcoin. So that would, I don't know, I'm just trying to kind of get that 300 million point, but regardless. They were the first insurance companies to make a notable purchase in Bitcoin and the acceptance in crypto. I think that that's a good step forward. I do come from an insurance background through my fixed income, and what I would say from the insurance companies is that they have to be comfortable with the asset. The insurance companies is very conservative. They have their alternative allocations, but the insurance companies want to see stuff rated. They want to see products rated. They want to see, the volatility, I don't think would be accepted by many insurance companies just because there's a lot of accounting process has to be done. If let's just say the price dips below 80%, there is some accounting principles that have to be done from a GAAP and stats standpoint. But what has been accepted by the insurance companies, which I'm more important at, it's from acceptance of the blockchain technology. And that itself, I think, is what we're going to see overall in financial institutions. The transparency and the security for all these transactions the insurance companies have to do in terms of their liabilities, processing them. I think that that's already kind of moved forward. I think I've read about 2 or 3 larger insurance companies already doing this. And I think it's real, and I think that that's really important to get this insurance, the whole insurance industry moving ahead. And I think we're going to see, obviously, you know, that's basically my theme, that acceptance is going to carry over to other institutions.
Mm-hmm. Got it. So not necessarily this year, but the big players are coming.
Well, yeah, I mean, I think that again, things change in a month, and I think that probably by the end of the year. And again, these kind of disclosures of what insurance companies are, how they're processing their acceptance into this space. I think, for example, there's smaller one, this Lemonade insurance company that, you know, that it's been kind of in the news. It's a newer company. There was a headline that says that they made their first investments in Bitcoin, but in reality, it was that they purchased or they went into financially an agreement with a smaller car insurance company in San Francisco that accepted Bitcoin in terms of their payments. And I think that's probably like the smaller steps that the insurance companies need, kind of investing into companies if they can, first of all, if they can have direct investments into the companies, and just seeing how their portfolio grows, and see once they see or accept that kind of, or I should say, once they accept that comfortability in terms of their, how can I say, in terms of the volatility, I should say, because I think that that's the main point that people just are staying away from. I mean, just now in the last 15 minutes, Bitcoin, you know, rallied almost 1,000 points, and that's just, you know, like for me, I'm comfortable with it, and Leah taught me to become comfortable with it because that's just part of the normal trading behavior of Bitcoin.
All right. Well, listen, I have one more question for you. You're a wealth of information. I have so many questions, but we are limited on time. Knowing that you're a music lover, you know, when you buy that plot of land in Decentraland, I want to go to a concert with you.
Let's do it.
In the metaverse, listening to music. But my last question is, look, I think like a traditional advisor, right? Asset allocation, you know, diversifying by asset class, by sector. In the crypto world, how would you break down the different, you know, sectors, asset classes there?
Yeah. And again, you're talking to a guy that comes from traditional standpoint that I'm trying to translate this over to, you know, more traditional finance, and Leah probably could give some more color whenever she steps on. But the way I see it is that you have these coins, right? And this is the way I look at it. You have coins, and I look at it only from Bitcoin and Ethereum. I'm also, you know, looking at some of the other smaller coins. But again, what's accessible to the normal investor? Obviously, Bitcoin, Ethereum, they stand out, right? And they're typically in the headlines. And when you see this in the news, you know, for me, I would say like a starting point of people, investors like all of you, to look at the journal, look at the Times, and look at that kind of high level writing that they're producing to become more comfortable in terms of their movements, right? Who's investing in Bitcoin and everything, that they provide great color. After that, you probably could look at some of the other kind of like other kind of news outlets out there. And the reason I bring this up is just because I think that that's just the coins, right? Now we're dealing with more DeFi, and that is a little more complicated to describe, and for a little more complicated for people to have access to, regular investors to have access to. Obviously, they can invest in ETF and have that kind of broad exposure, through these thematic ETFs, as we discussed before. But I think like the DeFi land is a little more complex. It's certainly exciting. There's certainly, like with all the headlines kind of coming through, especially with this kind of wealth generation that's occurring with some of these younger investors or some of these more aggressive investors in NFTs, in more of these like kind of like meta themed investment vehicles, right? Which may not be accessible to folks. I think that again, that's a sector that's going to be certainly innovated this year and create more access points for the regular investor. And I would say, again, you probably have to become more comfortable with how crypto acts, for these crypto coins act, before you kind of step into DeFi. But once you, and again, I'm constantly learning every day. I'm becoming more and more comfortable with DeFi. Maybe I can, challenge Leah in a conversation in about a couple months once I study on it. But I would say that for me is kind of like, you have the coins and then you have DeFi, and the DeFi is certainly coming into acceptance. I don't know if you wanted to say something, Leah, in terms of that.
No, that was great. Thanks so much, Bill. Actually, I'll toss that one to you, David, because I think you may have, an interesting answer. If you could answer your own question, what are your thoughts?
Of the asset classes? Listen, I definitely think people should diversify in the crypto space. I like to look at the world through, digital gold or store of value is Bitcoin. You have your, platforms and scaling solutions. So your Ethereums, your Matics, DeFi, I think is huge, remaking the financial infrastructure cheaper, better, faster, more democratized to everybody in the world. I think DeFi tokens deserve a major allocation. And then your application and utility tokens, your chain links, your Decentralands, metaverse plays. So I would break it down in those 4 asset classes, but at the very least, just getting clients exposure to Bitcoin, either through an exchange, through a private placement, or, through a futures-based ETF. And Ethereum, at least you're now in the game, you're in the market, and you have the majority of the market cap today.
I think that makes sense. And by the way, participants, now I get to ask a couple questions. So as a follow-up to that, David, and this was asked by a couple folks, and I like the question, how are you thinking about stable coins, and are you allocating to stable coins? I mean, from, our conversations and especially also in our DeFi hedge fund, there's a lot of yield to be made on stable coins. So it's kind of an interesting opportunity for cash management in such an uncertain environment right now. But what are you thinking?
So I am not allocating to stable coins today, mainly because I don't have the product. The second someone like Valkyrie, wink, wink, comes out with a yield product that I could effectively leverage, I would strongly consider allocating it. It is very depressing to me that I'm seeing on BlockFi, Voyager, seeing these 9% yields on stable coins when my clients are getting, 0.01% at their bank, but advisors desperately need product. If there's no yield component, just hold FDIC insured cash.
Yeah. Oh, Bill, actually, I'm going to toss this one to you as well. As you're wandering down this rabbit hole, what are your thoughts and even initial reactions when you started learning about stable coins? And from your perspective as a PM, how are you starting to think about them as, maybe a cash management strategy?
Yes, definitely. I was like David, where I'm looking at these opportunities and my eyes are just blown away. And, even the conversations with my initial conversations with our team members and them telling me these strategies on yield harvesting and everything like that, that was just astonishing. That said, like David said, it's accessibility, and it's in terms of, I think that it could be. And so let me explain something to all the folks out there in terms of all this, what we're talking about, yield gathering and everything. It's kind of like a repo process where you have, let's just say, in fixed income, we would have a bond, or you have some kind of asset and you're able to lend it. And you have, in return, you have either some type of currency, minus maybe some 5% haircut or something like that. And you're able to use that strategy across many platforms, let's say, and that's where the yield kind of comes in there. And you're able to build on that yield, but you just have to be an active manager on that. And again, it's kind of, how can I say, a little bit scary, just because you do have to open up all these brokerage accounts and be mindful about how the positions move and everything like that. But I would say that the opportunity is there. I would say that it will become, again, it's kind of building the new finance world where, maybe from treasury departments will look at this and see how they can take advantage of it in the future.
Yeah, that makes sense. So David, at least a tweet that just came out from Representative Emmer actually is that new digital currency legislation coming soon. And there's some whispers around town that maybe even this week, we're going to get a new report from Powell. From your hat, as a financial advisor, what worries you or doesn't about potential legislation coming down the pike this year?
So my honest answer, and this is maybe not PC for this talk, but I don't care about the regulation. The SEC, has damaged millions of investors by blocking a spot ETF in the name of investor protection. They can't agree on a responsible budget. They can't shut down crypto. If they do, I'll leave the country. I'm just joking. No, I'm not. And it's everywhere. It's the internet. So I believe Congress will get it right eventually. But I'm not worried. The only thing that keeps me up at night is if, Gemini or Coinbase get hacked. Like Mt. Gox got hacked in 2014 when I had my 80% drawdown. That is a real threat. That keeps me up at night. I think the regulators will get there. They're going to have to, because it is the future. Blockchain's here to stay. Crypto's here to stay. Digital assets are here to stay. The hedge funds are going to allocate. I agree with Bill 100%. It's just going to be like everything else political. It's going to be a real quagmire until we get there.
Yeah, no, David, that does make sense. Bill, from your perspective, and especially with us being an RA with regulated products and more ETFs currently filed with the SEC, what's worrying you, or what are you seeing? What do you think maybe we will see for, the other types of coins or products?
In terms of regulation and everything like that, I maybe not the choice of words that David likes. I mean, David used, but I like it. But I do see that, like, for example, one thing that kind of not worries me, but kind of like I'm keeping up on is the taxes and how, from an asset standpoint, how it's going to be taxed. And I was trying to think of some kind of analogy. Everyone hemmed and hawed when Amazon started charging tax. Like, I don't know if you guys all remember, maybe not a lot of you, but Amazon, when you bought something, it wasn't taxed. It was great. It was just like, it just came from somewhere. And finally those rules and regulations caught up and accepted Amazon, this store right on the internet where you buy stuff, from, and even like, and that's just, that idea, again, in 1995, you guys were all young, but I was in the middle of college, like buying CDs, God forbid. I didn't pay tax on these. I didn't pay taxes on these products I bought on the internet. And then I kind of hemmed and hawed, and then the IRS asked me, did you buy anything on the internet? Or I think the state of Illinois asked me, it's like, can you do it? And so we would have to do those kinds of regulations. I'm accepted for. I'm okay with, because that's just a part of the rules here in the United States. We all, whether we like it or not, we all have to pay taxes. In terms of the other kind of like the regulatory, I would just say that is, and I know that this is probably, like Dave said, probably a little aggressive thinking, but I would say that kind of is needed for the cryptocurrency in order to be accepted, right? Rules and regulations aren't bad. Financial innovation will certainly create ways to kind of like find the loopholes and use them, push that gray area and everything like that. But in terms of the overall success of crypto in general, I think is in need. The US should do it. But I also agree with Dave that not too much, because it'll push away all these current players right now and investors in the land here in the United States. I don't think the United States is going to do that.
Yeah, that makes sense to me. David, so since, as you said, unfortunately, we don't have a spot Bitcoin ETF right now, right? And that is the holy grail that we're all waiting for, Valkyrie included, since, we did have our filing in. However, as we all know, we do have the thematics, as you guys touched on before. You have the Bitcoin futures, but if we could speak just briefly about the thematics. So we do have one, Bitcoin thematic ETF, and it holds companies that hold Bitcoin on their balance sheet. David, just from your perspective and what you're hearing from clients, how do they feel about these crypto adjacent products as an interim step before the spot comes out?
So honestly, a lot of my clients, wait for me to bring them the ideas. I would much rather my clients hold, actual crypto. That's me. But I think those products are fantastic because at least it's something more palpable. So if the advisor is not comfortable really dipping their toe into the crypto waters yet, and they want to see how the regulations play out and what happens, I understand. But I think those thematic ETFs are great ways because clients understand publicly traded companies, right? Yeah. So I think as an indirect exposure, it's definitely a step in the right direction.
Yep. And Bill, managing this ETF, the crypto adjacent ETF, both ETFs, but what is particularly interesting to you about what you constructed for the portfolio? I mean, generally just, what has been exciting or what has been an opportunity given the spot Bitcoin ETF is, we're not holding our breath right now.
Yeah, no, I think that the spot ETF, I think regulators are just not going to be comfortable anytime soon, I should say. And God forbid I say it this year, but I don't think that it's going to be accepted just because they're not comfortable with this decentralized even theme or idea about it. Even though it should make sense, it can be secure, it's transparent, and it's safe. That's what I think, like in terms of the acceptance for the spot Bitcoin. in terms of so now we go into the ETFs, again, provides accessibility for all investors. I think from a operational standpoint, I think that it works. There is a small price to pay in terms of performance for this contango, this ongoing headline. But I think that it's going to be a minimal price to pay for for accessibility and exposure in your portfolios. I think that little price is negligible in terms of looking at the overall performance of coins.
Thanks, Bill. And last question, gentlemen, I promise. David, since you've been in the industry so long, and for everybody on the call, 2013 is one of the, you won't find many people in the world that has been in the crypto industry this long. So huge kudos to David. But any words of advice as new investors start to wade in and think about buying regulated products versus buying directly? All these coins are more exciting over here to Bitcoin. It's a lot to navigate, but from your experience and talking to your clients who come to you asking, how do I get a piece of the action? Or how do I think about it, especially in this very uncertain, economic time, any words of advice as they wade in?
Yeah, so look, I think for advisors, need to learn and join these great types of talks. If the advisors don't know, they can't educate their clients properly. I think advisors should be allocating at least 1 to 5% in clients' portfolios, explaining that this can go to zero risk in the event of a DPAC or regulatory overreach. But yeah, I think it should be a part of people's allocations. I think it'll be one of the best performing asset classes over the next decade. I agree with Bill that it is uncorrelated, it is an inflation hedge, and ultimately, you allocate whatever you're comfortable allocating for your clients, and as they give you more, if they're accumulating, you follow that same pro rata allocation. For retirees, I'd bucket it as, hey, this is the long-term growth bucket for your later years in retirement or legacy.
That makes sense. Bill, any follow-ups from DCA strategies to trading it as you would any other volatile microcap? I mean, as investors, institutional and retail, jump in, any words of advice, words of wisdom?
No, I would just say right now is the opportunity with these little price dips that's occurring, to kind of invest in your personal portfolio. And I would say that, somebody, once you put something in your portfolio, I think that you naturally become informed about it. You're looking for it in the news, and whenever you're kind of just surfing on the web, you kind of get that. You want that information on the investment that you made. And I think from that standpoint, you're right in terms of just the up to the 5% allocation. I think that's appropriate. And but again, I'm not saying that, one of my things that I kind of been doing over the last week, because I was a little bit of sick, so I was kind of like just in the room, kind of like looking at it, I was investing almost like at nighttime, because the markets are always open. I was investing in all these kind of like a diversity of coins, and it just wasn't. I'm not saying drunk dialing, but I was drunken. I was completely sober, but I was just kind of like buying just little pieces every other night or something like that, just because the price movement agreed with what I was looking for, and I think that overall I would have a nice little base here. So when it does appreciate, I can certainly be rewarded.
I think that's a good point, Bill. For everybody on the call, Bill is a brilliant technical analyst. So it's very interesting on how well TA has always worked for the crypto industry. I think David can attest. It was kind of maybe more recently, in my perspective, that we've really had the fundamentals to boot, that we can do the type of full spectrum analysis that we're used to on traditional finance. But for the TA chartists out there, they are still ruling the roost when it comes to crypto trading. And I think, to Bill's acumen, you can do that type of trading where you really are looking at a bevy of different coins. I don't think it's for everybody, but that shows Bill's very, very high intelligence level on TA. So anyways, unless you guys have last thoughts, I think we'll end it here. David, again, thank you so much for being on. Bill, always a pleasure. Thank you so much for being on. And again, sorry, one sec. There we go. So again, everybody, thank you so much for joining us today. We do hope that this was helpful. Our next Bitcoin Answers webinar is going to be in 2 weeks. I also wanted to flag a couple other opportunities to learn about the space. So on Thursday of this week, we're going to host a sustainable mining spotlight with the CEO of a Bitcoin mining firm, CleanSpark, as well as a mining expert, Christy Lee Minahan. So a lot coming up, and we hope you can join us. And everybody, thanks for joining today.